All right, that should be being recorded. As I told people, I think for the most part, people like to. It's tough. 4:30 is a tough time to kind of catch a webinar, but it'll be recorded, and always happy to kind of go over your questions, and we can, now that we also have new value areas for the year 2019, I want to go over those. I didn't get a chance to really put that in. It's just too much. It's too much to kind of write and to kind of put, in this document that I sent out. Was that Monday? Monday or Tuesday? Whatever day the January 1st was. I think I said that was the day I was flying back. But yeah, so let's go through some main points. Let's kind of go through what we're encountering right now, and then we can kind of come up with a little bit of a game plan for the year and some things to watch. So, I mentioned 2018 was a difficult year, absolutely, and it's going to be that way. You know, funds like this, David Einhorn. Now, I don't think he's going out of business or anything like that, but I was talking about this at the end of 2018. There's a lot of funds that are either returning money. Zero Hedge has been all over this. There's a lot of funds that are either returning money or basically going out of business. Either going out of business, returning money, turning into a family office, that type of thing. So we saw that a lot at 2018, and that's going to continue. Funds that kind of have to be invested in equities, if that's their mandate, it's going to be really difficult for these guys to survive. Some of them have the flexibility. That's why they call them hedge funds. They can kind of do what they want, and they can short and have more flexibility than just straight long only funds. But it's going to be really difficult for these funds for some of them to survive. So, and I think, some of the selling that we saw towards the end of the year, I don't want to get into the discussion whether or not it's algos and so forth, but it is what it is. It's a lot of funds liquidating. They have to meet redemption, so it's forced selling. When people yank, and say, I want to get out of a fund, whether it's a hedge fund, mutual fund, these funds have to sell. They don't have any really choice about that. So I think that really came up in the Lipper data. There should be another Lipper report out. I saw the one headline about bank loans, which looks horrendous right now. I think 7 straight weeks of outflows. So a lot of these trades that have been very popular the last like 7, 8 years are kind of coming undone. So we have a whole new year. We are starting the year. I know we're 2 days in, but it's, I think, to put this in perspective. I know sometimes people at the end of the year they try to play catch up. They look at their performance for the year, and if they had a rough October, November, they try to play catch up. 2019, the kind of way that I think about it is just to kind of start fresh, with a whole new game plan. Really not trying to force trades. In the strategy, I like to borrow from Mr. Bill Belichick. I like to incorporate sports whenever I can because I'm a big sports fan. But his philosophy is, they always ask him in the beginning of the season, hey, what do you think you're going to do? Do you think you're going to make another run at the Super Bowl? And basically, what he doesn't really give a lot of answers in the press conferences, but you always hear him talk about one of his philosophy is basically to win one game at a time. And I think that's helpful. Of course, you want to look longer term as well, but I think, basically just also looking at, taking care of 1 month at a time and trying to get profitable one month at a time, you'll get a great year in performance if you do that, right? If you rack up some really strong months, month over month, and kind of stay, with your head down and doing what you're doing in trading, usually, what that amounts to for me is a pretty good year. Last year was a tough year. Predictions. I talked a little bit about that. I'm not putting out any S&P targets or so forth. I really don't like to do that because while I've got some ideas, of course I have ideas about what could happen, in the first couple months of the year, but I really don't want to stay hooked to any or anchored to any predictions, because I think that really messes up people's judgment, right? You have people that are perma bulls and perma bulls and perma bears. I don't want to be either one of those. I do want to, short more often, where, if we're going to fall like days like today, even though I didn't really trade much today. I just didn't have a good, I didn't have a good feeling. And it's better to, if you don't have a great feeling about, and if things kind of threw you off a little bit, just take a little bit of a step back. I thought yesterday was a great buying opportunity, and you saw I kind of went crazy going day trading with some things, and I think I was out of some things a little bit too early because I wasn't expecting that much of a move. But when you really have a good feel, that's when I tend to kind of trade more. And today I didn't have that really strong feel. I didn't know if we were going to get a recovery at all today. I thought yesterday was really nice, but I just thought there's too many negative things for us to kind of overcome them. And I thought it might be a choppy day. I was surprised that I guess we went out on the lows today. But with a jobs report tomorrow and Powell speaking, I didn't think people would really kind of press too much, either buying or selling. Sometimes remember what we saw in the last Fed meeting, which is basically what we've seen on the last few Fed meetings, is we see short covering. We see short covering, and then after the Fed meeting, then shorts come back in and start going nuts, selling everything. But we didn't see that today, even though I think everybody knows that Powell speaks tomorrow and we get a jobs report tomorrow. So let me go ahead and, before I get into the technicals, because I want to talk about that. Where'd this go? There we go. Disclaimer, everything obviously is for information purposes only. This. So I just have a couple things, a couple bullets. I don't want to spend 2 hours talking about all the negatives, but we've got some major things in that negative column. We've got, it was a nice conversation, I think, in the last hour. Just as always, I think we always have really good, really good points that everybody brings up in regards to what's going on in the market right now. Right. And I think the Fed, unless they come out, I don't know if this Powell is going to say something different. I hope he does tomorrow, but he hasn't been doing it all along. So I'm waiting. I'd rather have him prove it to me that this guy's going to change, but he's got an axe to raise interest rates. And I don't really understand it. But until I hear him be a little bit different in what he says, then and that's great. I kept on some things that I'm long. I'm still kind of positioned more long than I am short right now, even though I put on a short today. But I would rather be pleasantly surprised, than hoping that he's going to say something. But you would think as well, the last Fed meeting, I think people were shocked at how hawkish he was. So, a couple weeks have gone by. Is he going to come out? There has been some new things that have been unfolding. We had the ISM numbers. Keep in mind, and like I said, you guys are making great points. Rob mentioned earlier. Keep in mind, we're still up a lot. So while the market has come in, around 20% from the highs, we are still up huge over, since this bull market started. So it's kind of a blip on the screen when you kind of zoom out and look at a 10-year chart. It is what it is. We've gone up so much. So yes, it's a correction. We're down depending on what you look at. Some things are down more than 20%, some things down a little bit less. But if you zoom out, it really isn't that much, considering the trend. And I'll bring up a long-term trend, but I thought that was a good point. And if we bring up today's data and the economics that came out today, Yes, there was a big drop in ISM, but it's still way above 50. So unfortunately, he still has, anything above 50 for the ISM numbers is expansionary. Yes, it's off the highs as are most stats that are starting to come out in the last, couple weeks. Like the Richmond Fed the last week was horrific. But it's still expansionary. It's just not as crazy as it was. And we'll see for the jobs number tomorrow too. I mean, that'll shed some light on too. But what happens if there's going to be if the number comes out tomorrow, around in line or on the screws tomorrow, then he doesn't really need to say anything. Unfortunately, I don't think he's looking at by the time he spoke last, FedEx had already come out and put out dismal numbers and dismal guidance, and this guy didn't blink at all. So I hope this guy changes his tune and kind of gets with the program that what's going on globally. What's crazy about Powell too is he's been around for a while. Like I think he was on the board during the financial crisis. So it's not like he's a new guy. He's experienced all this. So what he's doing, I think if Bernanke or if Yellen, I think it would take a different tone. But I really don't get this guy. So anyway, that's my opinion on that, and I hope that he changes his tune tomorrow, even though it's just one of these speeches. It's not a Fed meeting or anything like that tomorrow. As you could see, what else do we have today? This ADP number came out hot. It came out 271 versus 180. So again, that's the ADP number. I really don't put a lot of weight behind this ADP number. I said that this morning. I say it every month. Sometimes it gives mixed signals. I honestly, I hate this report, but I just wanted to mention that it came out this way. Yeah, I mean, and that's the fact of the matter too. If you look at over the last 2 years, the market is still on average. If you look at it, I guess from the election from that point, um, you know, it's still up. So, it is what it is. So let's talk about a few other things. Um, Let me just skip to this. So let's see. Do I want to talk about that? Well, yeah. So let's just mention. Actually, let me talk about the top first, and then I'll talk about the Santa Claus rally complete, and we got the bounce from oversold level. So I'll get that because I want to talk about the charts with that. But yeah. So besides that, right? That's just one thing, right? Then we have the trade war going on. And it's not just the trade war with China, it's also China is weakening. The data that's been coming out from China is now getting in. So I just talked about the ISM numbers. Our ISM numbers, which again is a leading indicator, is still overall strong, above 50, well above 50. But China had their numbers, and one of the numbers that came out was less than 50, which is recessionary, which is a contraction. So this thing has to come to an end, and we've said this for months now. We said this back in the summertime. And I know some people argued with me, but I said as long as this trade war goes on, the longer it goes on, the more damage it does. And that's what we have going on right now. I mean, it's inflicting more and more damage. We just got Apple's report, and it's going to come out more and more in these earnings reports for companies that have exposure to China, right? I mean, the last quarter, you started to hear some companies say that it's not necessarily affecting them yet, but they're starting to feel it. They're starting to, you heard that a lot. So I think this time around, you're going to, who knows what else we're going to see in terms of earnings. But I would think, without really making a prediction, it's going to start to get ugly. Micron said that as well. Delta's a little bit different. But, I think Josh Brown said yesterday that there's 40% of the S&P profits come from overseas. 40%. So again, that's why I look at international markets. I know some people that I see on Twitter will only they'll be like, "Hey, what happened to the S&P futures?" Well, China went down. Um, uh, but and I know some people only trade US, but it's important to look at international because we don't operate in a vacuum. Again, I don't know if that number is right, but he said 40%. It sounds right. 40% of profits in the S&P, in the SPX, come from overseas. So it's going to have an impact. And again, that's why I look at what is going on internationally. I think more than most people do, especially retail traders. So again, so these are, when you add these things up, right, and the China weakening, this is a tough place to be in right now. So I think you just kind of have to let this play out. I don't know how long it lasts. I think at the end of it, once some of these things get cleared up, I mean, some of these things should be temporary. Now, I have government shutdown in here. That's probably the least of our worries. But, if I had to rank these things, it probably would be these two things, right? These are two big negatives. And unfortunately, they don't make a positive. And then this is going on too. I mean, hopefully the trade war will help alleviate this, but they've got their own issues. That's scary to me that China is slowing down as much as it is, and their property reports are coming down. So what are we seeing in terms of flow? Just a hell of a lot of money going into bonds. I mean, I haven't really had a chance to kind of say if this is more than I've seen ever, but I should still have this up on Bloomberg. But I was looking at, I'll look at bonds first. This is good because on Bloomberg it'll show you the actual inflows. But TLT had the biggest inflow since ever. The biggest one-day inflow ever yesterday into the long-dated bond ETF. Right, and I've been talking about the short-dated treasuries. They've been catching money for since mainly some in the beginning of 2000. Maybe not the beginning of 2018, but as we got to the second and third quarter, and then it really picked up at the end of the year. So, right, and I mean, and look at the volume. I mean, these are big moves. We could look at that. We looked at this. So would I be getting into bonds here? I mean, it would have been, I guess, a nice buy in the beginning of the day. You know, I really haven't been participating too much in going long bonds, just as kind of using it as an indicator. We talked about a couple weeks ago when we got overbought in the TLT. We hit this VPOC. It formed the bull flag, and then we lifted. So we might see this again. I mean, you could take note of what we did last time. We went a little bit higher, then we consolidated, and we've got another one up here. So if we get another consolidation, maybe that's a chance to kind of play. But you're talking about a $3 or $4, 3 or 4% move. In my opinion, this is better to play in, and this is not dividend adjusted, so it'll look different with dividends. But this is something kind of for to be allocated in, maybe not your trading account, but more your investment account to see bonds move up like this. The other one was IEF. That's a shorter duration treasury that's 7 to 10 years. This one has more to go. 106 would be the next VPOC. Oh, that just went away. Yep, there it is. Right around 106, a little shy of 106. And that, if you look at the fund flows, unbelievable unbelievable inflow into this yesterday too. I mean, look at this. Believe it or not, I think this is the biggest inflow since 2014. But look at the volume. Look at the volume in BND today. And there's a number of other ones. I think ITE was another one I found, or no. What was the other one that I saw? Was it IGE? No. There was another one that saw really big inflow as well. I can't obviously I can't remember the symbol. It was intermediate government bonds. This should come up tomorrow. There was some big buying in this today, so the flows usually come up T+1. This is the all U.S. bonds. Actually, has some corporates in there too. And then ones that I've been talking about for a while. So that's longer duration. But look at BIL, all the inflows in there. Shy has been the one that's really caught my eye. All these inflows. This is I think 1 to 3 year treasuries. So really the short end of the curve. And then there's a number of other ones. BSV. This is Vanguard short-term bonds. Big inflows in here. So why am I going through all this? Because it just shows you what these funds are doing. And then if you look at gold, people are just, funds are getting out of the way. Look at the funds in gold, GLD haven't been that dramatic, but I would say from option activity, this has been the most consistent thing that we've seen is, 2000, a lot of 2020 bets in gold in options. There was a GDX call spread the other day. So it hasn't been, and I think rightly so. I think if people are really risk averse, they're going to just go into cash or bonds, and then secondarily probably gold. The gold is a little bit more funky. But again, IAU is more, this has a lower management fee than GLD, so it's more of a long only product. But this has also been showing recent inflows. Again, not as much as those cash products and the treasury products. Just to look at GDX, which is another one. So I bought a little bit of GDX today. GDX is tough. I refer to GDX as the widowmaker because people have been wrong on this thing a lot. And look at all the inflows here. And this thing went down, 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 down. That was in the beginning, towards the end of 2018. Sorry, towards the end of 2017. And the beginning, wrong. Wrong. So yeah, that's where I see a lot of where the flows are going. A few months back, around October, I saw a lot of money shifting into value and out of growth. You haven't seen that transition happen too much anymore. You've seen more just overall getting out of Dodge. All right, so that's so why I bring this up, and these negatives are more than normal. So I think positioning is pretty important and adjusting for this, and putting together. So what else? So I wanted to talk about next the technicals, what we saw basically since December 24th, the bounce that we saw, and then I'll talk about some basically shorting, some ways to short that are kind of under the radar ways to do it that will kind of help a little bit, because I know a lot of retail traders, it's a struggle to short for some retail traders. But let's go ahead and look at the technicals. We'll start with the S&P. So we could do the SPY, I guess. So for me, I wanted to wait until the afternoon to see how this candle was going to show up, because remember yesterday we started below. I made a lot of reference in that strategy note that I sent out about the 5-day moving average, because basically that's all we really had, was the 5-day moving average that we overtook. So we're now back below it, right? And you know, there's nothing really else to kind of hang your hat on. But yeah, we started below the 5 period yesterday, and we came back above it, so it looked like everything was fine. And then after the close, obviously we got Apple, which Apple, by the way, one of the things that I tweeted out this morning. I saw a couple people on Twitter talking about, well, I don't own any Apple, but I really see some, you know, people are really, and I hate when people are nasty to each other on Twitter about, just whatever view that they have. But I also don't like when people passive aggressively mention that, oh, well, I don't own any Twitter, or sorry, I don't own any Apple. Well, it's like, well, yes, you do. Unless you don't have any ETFs or mutual funds, unless you don't own anything in your in terms of equities in your 401k and your IRA, then yes, you're kind of clean. You don't have anything. But the Bloomberg rep that specializes in ETFs, his name is Eric Balchunas. He and his colleague Tom, I can't pronounce his last name, but they were sending a lot of notes out on Twitter today about how many ETFs that have Apple in it. I mean, it's all over the place because Apple does so many different things. So everybody has exposure to it. If you own if you have a 401k plan, and if you have an IRA, and even if you just own an SPX fund, you've got Apple in it. So you know, I get very I think people they're trying to prove a point, like, oh, I don't have any Apple exposure. But anyway, my point is with this is that it's a big thing. It's a big thing, Apple coming out. Even though I think we kind of knew that they were going to have a weak quarter, but it appears to be weaker than expected. So we've lost the 5-period moving average, and so that's it. We basically had the Santa Claus bounce that everybody was looking for, and I think either today or officially tomorrow. I don't know what day it officially is because I'm not really in the camp of I wasn't really waiting and scheming for a Santa Claus rally. I don't like these seasonal trends. I'm not a big seasonal trend person. It's kind of last on my list. Because December was supposed to be a very strong seasonally, is one of the strongest months seasonally, and it ended up being one of the weakest. So I just can't hang my hat on the seasonality factors, and thank goodness I didn't. But I just don't think that it's that significant. So anyway, so that said, the Santa Claus time, may have one more day left officially, but or draw it to a close. But that's it. So if you got what you were looking for, you have to kind of pare down your risk a bit. If you got the bounce that you were looking for, and if you were in that camp that you were playing for a bounce for the Santa Claus rally, well, you got it. And we did get a really nice bounce from the lows that burned off some extreme oversold levels. So now that we did that, and it looks like price is going to duck back below has ducked back below the 5-period moving average. Who knows where we could get to at this point? Notice this MACD, which looked like it was crossing over yesterday, just uncrossed. Qs were showing that. Looks like that's uncrossed as well, which the MACDs can do this. IWM, which is something that I'm watching pretty closely because there's less exposure to international, maybe a little bit less exposure to China. Who knows? performed a little bit better. But could we take out? I mentioned in this article, I do like to, as much as I badmouth Twitter. There are some really good follows out there. If you didn't get a chance to read both of these articles, I thought were excellent. Um, this follow the irrelevant investor, basically talking about how it's very difficult. He looked at several different market bottoms, and I think his main conclusion was each one is different. So, and that's the same thing with, like, that goes back to my seasonality. Every time, these market bottoms, they're very different and they're very unpredictable. There are some things that could help. We looked at the fear and greed index when we got to 1224. It was a 2 the day before Christmas. And then Helene Meisler put together, key charts and indicators, and she did all. That's an excellent article too. And her conclusion was that we will probably come back and retest the lows, given things were so many indicators with making new lows being made versus new highs. Usually, you just don't have a V recovery when things got as bad as they were down here. So you have to position for that. Now that the bounce looks like it's over with, and who knows, something could happen with Powell tomorrow that could give us another bounce. This market seems to do the opposite of what you're expecting. So, I think it's going to be tricky, and the other thing to look at too is to realize that one of the outcomes could be that we move sideways for a while. We get these herky-jerky movements. So it doesn't have to be doom and gloom, and it doesn't have to be a V recovery. It could be something in the middle. It could be back and forth price action for a while. That's kind of where I am. Like, I wouldn't be surprised if we take out the lows here. Right, so we could start looking at some sectors. SMH was the worst performing, almost back to the lows. So this, I think, is important to watch, just as I think IWM is important to watch. These are usually leading, market areas to keep an eye on. But I think semis is very important to watch. I think if semis takes out the lows, I think the overall indices follow. And this was down 6% today. Looking at the 1 hour, I tried making a little bit of a trade at the end of the day, thinking that this might bounce. But really, here's your support for the week is I knew full well that it could go down to 82, but I just didn't think that we would be down, that the semis would be down 7% today. But I don't know. I hope we open up lower tomorrow and then, have a chance to bounce. All right. So that could be one thing to kind of look for is, maybe waiting for us to get oversold again, which we are not right now. Right. I mean, that ended up being a real nice buying opportunity. And then kind of wait for some confirmation. It could be, price get. So right now, this was kind of dumb of me, right? In hindsight, I only spent 27 cents or something on some calls, but this is basically taking a shot. I mean, notice the price. I was talking about the 5-period moving average all day. We spent on the 1 hour chart in the SMH ETF below the 5-period moving average. We have not retaken that at all. You notice when we got the bounce on 1224, here's where we took it over. So it's really like simple to kind of look at this stuff, but the moving averages helped me a lot. They help me avoid mistakes and just saying, hey, I'm going to buy here just because I think it's gone down too much. Notice this whole thing, right? Price never really got above except for a couple false ones here. Even if you went long SMH here, you knew where to get out of it once we dip below. But, all the way from 91 bucks down to 81, price never really got above the 5-period moving average. So again, I bring up these things because I think it's a really keep it simple approach to watch these trends, and watch these swings. So big swing down, retracement, and now we're back down again. So maybe this changes its tune here. I wanted to go over the value areas for the indices, and then to take your questions. But by all means, whatever questions you guys have or whatever points that you guys want to talk about, I will start to get a little bit more positive. I'll talk about some things that you could do on an everyday basis. But let's start with SPY on the weekly chart. Right, so the weekly chart, we have brand new value areas for 2019. Let's just let this adjust. Notice where we are. So how do I read this? I was going to try to have Webb come on, but maybe I will do that once he comes back from Vegas. I know he has to leave, but so this is the first week of 2019. I mean, we're below value, right? I mean, so we're starting the year below value. So it's generally not a place to really go nuts adding risk. Just like everything else that we talked about. The technicals are showing the same thing. Qs. So that level is right around 261. And we could do one of these at some point. We could bang up to this bottom of value. And then you got to peel out of, in my opinion, you would need to peel out of long exposure if we rally up to 261. Right, because that should be some big resistance. Qs. This one's a little bit better looking, 157.20. But we've got a developing. Actually, this is no longer developing. We've got a virgin point of control down here at 141, and the weekly 200 period moving average. But this is also we're starting below value. IWM, same thing. This one's probably the most under value. Notice a virgin point of control here that we're below, which is now active. All right, so these all look bearish to me. Are there any questions? Anybody want me to go over any charts? I'll be happy to go through all the S&P sectors as well. But so here's the positives, right? Is we're getting these huge intraday moves. That the positives here are, honestly, you don't have to wear much risk for the amount of intraday moves that we're getting. And I'm learning this too, right? I mean, for me, I'm more of a swing trader by nature. So, I have to put more of my day trading hat on, and I really have to stay, there's always things to learn, right? I mean, for me, I traded LVS yesterday, and I got out way too soon. This thing went all the way through the value area. I thought it would kind of stop, but I left some money on the table, no doubt. But look at the range this thing gave us. So 52 to 54 bucks. I mean, maybe here, if you have to be disciplined. You got two things here. Once the yellow line crossed below, once the 5 crossed below the 20, it's probably your first place to say something trend changing. And then the price went below the 50. But even so, if you got long here and you exited here, I mean, what a move intraday. And again, you don't. I'm going to talk about options versus trading options versus cash. SPX up 14.4%. Uh, since election. Wow, that's still a lot. Yeah, I mean it's whatever you're comfortable with. I like the 5 day. It gives me a little bit less false signals. I think some people use the 8 or the 10 day. So it's really whatever you're comfortable with. I use the 520. I mean the 20 is really nice too because if you get in on the 5, you could basically use the 20. It's another day trading methodology that if you get in on the 5 day or even the 20 day, you could use the 20 day as your exit. So you don't. But the 5 is going to be very whippy, right? I mean, there's going to be some false signals with the 5, and I would think even more with the 3. It's just different. It's just a different time frame. It's whatever you're comfortable with. So whichever one. There's no magic. There's no magic moving average. I mean, it's whatever. They're basically for the moving averages. I think it's really good to tell you what trend. To tell you if you're still in a trend or not. And it's really good to kind of give you exits. It's just something to kind of aid you in trading. Some people just use price alone. I like to use the moving averages because it gives me a reference point. But it doesn't, whichever one you use, or you could use a trend line too. You don't even have to use the moving averages. You could just use a trend line. But so yeah, these intraday moves. I mean, that's really right now the positive right now. I know back up here. Whoops. Whoa, too far. I've got negatives, but there are some positives. This intraday volatility is really good. Again, other things for me to kind of do a little bit better on is just holding those. And I think we've talked about this, like, just even with the index options, holding a Q or S&P through the day. So what did we do for Qs today? We got this false move. Today was a little bit trickier, I think, and that's why I didn't really do much. But we started to go lower. It's just I thought we opened up too far down to really press shorting. We opened down around 2% today. So I wasn't really crazy about shorting in the hole today. So again, it really depends on the day, but yeah, I mean, even though we ended up going from high to low, I mean, this would have been a better place, I think, to short, but that's all hindsight is 2020. But certainly, for the most part, we are getting major moves. So you could when the VIX goes above 25, I tend to trade. That was the first thing that I traded yesterday was the Qs. You get enough movement, you get enough juice. When the VIX is above 25. So what did I do? I mean, Bob, it's really a question of your preference. Could you explain on a day like this, would you trade the options? It really, you have to kind of get your own comfort level. A lot of traders in the room trade, next week's, or, I think Michael, but I know a lot of you guys do this. You go out a week and you go just a little bit out of the money. So around like a 40 delta. Yeah, I'm going to get to the SQQQ and SDS and all that stuff next. But it's really your preference. I know some people like to do in the money options as well. But what I usually do is a little bit out of the money, and unless I'm taking a really lotto shot like I did on SMH today, which by the way didn't work, where I'm only investing, where I'm only paying like 20 or 30 cents because that's all I want to risk. I will do a weekly where I can find something out of the money like that. But for the most part, what I'm normally doing when I'm day trading is probably going out a week in options, and I'm going just a little bit out of the money. So Qs right now, like if I were to day trade on the long side for the Qs, I would look at the 11th options, and I would probably look at like the 151 and a half. The delta is right about a 40 delta, 151 and a half, if I said that correctly. That's what I do, but I've also been doing, the Qs are 150. I chose Las Vegas Sands yesterday. I would rather, if I have the option to, just trade the stock because we are moving faster. So anything around the $50 range, I'm going to trade stock every time. It's just a lot easier to do because again, the move, if you did this correctly, maybe 52, 54, that's a great trade for a day. But of course, you could do the options too, and you could go out. If you think that you might want to be holding the trade longer, I don't always do next week. Sometimes I do the monthlies. For a while I was doing a week or two ago. I was doing February options. It's still cheaper than owning the stock. It's not as cheap as weeklies, but sometimes I think I might want to actually own it a little bit longer. My plan a lot of times is to get in as a day trade and then maybe hold the last piece. If it works really well, hold the last piece overnight into a little bit of a swing trade. This way I've reduced my risk and I'm kind of letting a winner run. So yeah, so this is another way. So I have this as a bullet point for shorting. I think it makes a lot of sense. I think I'm missing a Q in here. To use these inverse leveraged ETFs, just like a stock, you don't have any maturity on them. I was doing that a couple weeks ago. I was using SQQQ. It just kind of flips things around for you. Look at the chart of SQQQ. Again, I wouldn't necessarily. These leverage ETFs are not really meant for swing trades. They're meant for day trading. So with this volatility, sure, and I think what I was doing, because I have to kind of retrain myself a little bit, but I was buying a couple weeks ago like 200 or 300 shares, which I wasn't getting enough bang for my buck. And I needed to do that a little bit bigger size using SQQ. Because I was finding that I got the trade right, but I was only making like a couple $100. So again, just like anything else, if you put on, if I put on 500 or 700 shares of SQQQ, I mean, it's just like a five lot or a 7 lot. You got to really be on top of that stuff if you're going to day trade. You got to be super paying attention to it. Yeah, I mean, it works really well. I mean, I know Susan's been using these. I mean, they're liquid as hell. I mean, so you don't have to worry about the volatility changing during the day. If you get a choppy market, you could get out of these very quickly. Volume is really good. Volume and liquidity are really good. And that's the same thing. So this one is 2 times short. The equivalent, right? I think these are 2 times or not 3 times. I'll have to double check that. The SDS is 2 times, right? Some of these are double, some of them are triple leveraged. The one for the S&P is SDS, 2 times inverse. All right, so you want to be cognizant of how much risk you have on. This is 2 times short. What's SQQQ? This one's 3 times. So SQQ is 3 times. You could look them up. All you have to do is Google leveraged index or leverage Qs, and you'll get the whole list. So whatever. I also look at SH. That's just 1 time. That's just the opposite of SPY. So it's literally the inverse. So this one would be better for holding overnight because you don't have to worry about major drag like a 3 times levered one. I mean, this looks pretty good for a long, doesn't it? It doesn't look right. We bounced off the 20-period moving average. 3281 would be your top of value. So again, you have to have a decent sized position. So would I play these in options? No, because you're adding like another degree of volatility, and you're adding. You're putting in too much leverage. You really are, and they'll price like so. If you look at the so if I bring up SQQQ, so first of all, the volatility, right? If you look at the implied volatility in, let's say, the January options in the Qs, it's around a 31%, and it's 100% for the SQQQ. Right, so that the price will change very quickly, and if it goes against you, it'll go against you very fast. The price of the option. So I do not do that. So I think we covered that for day trading. So option activity, I wanted to spend just a couple minutes on this. I think we're about 50 minutes long. So option activity, I talk about this in the room a lot, but just as a refresher, I do not tend to follow option activity. I tend to use it as idea generation. I'm not an unusual option guy. I'm not, some of these guys who live and die by option activity. I really have a major problem with that. I think it is really selection bias. The ones that people talk about, they only talk about the winning ones and not the losers. And I wish I had stats on these, but I would say the ones that really work. I mean, what do you guys think? For all the trades that we see, I would say maybe 1 out of 10 really work well. I would say maybe 1 out of 20 end up being a double. And you don't hear anybody talk about that. You don't hear about the Nigerians talk about it. The Nigerians talk about a different trade every day. They talked about trades, albeit it's complete bullshit. Sorry to call them out, but they're on TV and they're on CNBC. I think they really do a disservice because I think, as I mentioned, I think people will hold on to trades too long because. Where's my little option? I put this someplace in here, but people hold on to options too long because they think that the person who purchased the option knows something. Right? And you had that today. I mean, there are so many Apple options that trade. You could find anything. But what about all the ones that trade every single day that don't work? I mean, Apple's one of the most heavily traded option. So, yeah, you could cherry pick an option from yesterday, a put option, and say, oh, somebody knows. But what about the last 2 weeks of options where they were buying? There's calls and there's puts, there's calls and there's puts, there's calls and there's puts. Come on. If you look at the actual percentage, it is a very low number. So I hate that. I hate when people pick out an option trade after an event and say, oh, because it gives people a really false sense of thinking that it is a holy grail of profits. And I'm telling you, I wish there would be a highlight clip of the last 3 weeks of the Nigerians, because they basically, one of them mentions option activity. How many do you think of those trades that they've mentioned in the last 3 weeks that have worked? Like really worked, not 10 or 20%, but let's say 50% profits. Maybe one, two, three out of 15. I'd say maybe 2 out of 15. So that means you're going to have 13 losers out of the two. And these guys are supposed to be the professionals. So anyway, if you think that I'm wrong with that, that's fine. But so for me, it's mainly an idea. It has to really, I have to find something that when I see option activity that really fits my system. And other than that, you could use it to day trade. I did that, thank goodness. So Corvo was one of these trades from last week. We saw big Corvo calls last week. Right? And there's a bunch of other idiots on Twitter that's their only, they're one-trick ponies. They can only use option activity. It's to me, that's sad. But we saw a real nice order. I think it was this one, the February 60s. Sweep opening $1 million trade. February 60 calls. Now, maybe they got out of these here. When did they? I guess they got out of them on 12/31. And for a lower price. Right? So I day traded this one. And thankfully I got out of it. Maybe did I hold one piece? I think I had two positions. I owned it in cash and I owned it in options. And I think I may have held one overnight and got out of it quickly. So again, I did that with Marvell yesterday too. I thought I mean, I had no idea that Apple was going to come out, and I don't really know. Maybe I should know, but I don't think Marvell has any components in the iPhone either. But whatever, if it breaks support. But again, so this is I think a good way and I will probably use option activity for this because it does create same day momentum. Right there, I do agree that it creates same day momentum. Because everybody talks about it all over the place. Oh, did you see the option in this? And people drive it up. But that's not going to be my bread and butter of trading. But yeah, I mean, yesterday was a good example. MRVL, I saw short dated calls go up. But hey, it broke below my stop, and I didn't even wait till the end of the day for this one. So it ended up being, and I would rather have paper cuts than really a deep wound. But that's what it's going to be like, I think, for the next couple months. And I've got some other trades too. I had a trailing stop on Team today. Now, this was a nice trade. It did not hold that top of value, which I would have liked it to do. I would have went back into it because I did not hold a big position in this, but I was able to take a target at 81. Excuse me, 91 from purchase price 81. That's a nice trade in stock. But yeah, it broke. I mean, this is really not that big of a move, but whatever. I would rather have my stops really tight and for a trailing stop too. But MRVL, yeah, I mean, I'm gonna unfortunately be looking at more. There's gonna be more counter trend trades. But yeah, this poked its head above the 50-day moving average, and then it went right back below. Now, if it regains it, I could get right back in. There's no problem. But I'm not gonna sit in this thing and watch it go all the way down to retest bottom of value or the lows. So again, it's going to be that market where if I'm going to try swing trade here and there, I'm going to get out with a paper cut. and live to fight another day. And I think that is important. Now, again, so what I did, by the way, for MRVL, right? I had set every time that I get into one of these trades, this is very important right now. You get into the trade, this is just very good trade management. Know where, as soon as you get into the trade, you should be placing an alert and a target. My first target, I said I thought I could get to the VPOC. That would be my last target. My first target, I sent as 1733, which is the bottom of value of, what is this, November? So kind of halfway point. And then I also put my stop alert, again, not a hard stop, but a stop alert at 16 bucks, which is what I sent out in the on the private Twitter yesterday. And then, so once I get stopped out, right, it's not that big of a deal. I set an alert back a little bit above 16. I think I set it at 1605 because I could get right back in at 1605. It's not a big deal if that's a false move down, which we see stuff like that happen all the time. But you have to be thorough. So again, on entry of trade, putting out a target. I'm putting out my stop alert. If I get stopped out, I'm putting an alert where I care to get back into it. And if it never gets back above that 1605, so be it. I don't need to, you know. But once you sell, you kind of you kind of feel relieved. Yeah, there's some fear of missing out, but ultimately, like I would much rather be out of this now. And if it happens to go up above, 1605, I think it could be a good opportunity. Because I do think some of this Apple stuff, these names, I mean, look at this name. It's been down from 22 bucks down to 15. It had earnings. The earnings were not bad. Now, again, the earnings are kind of in the past. But I think it's good risk to reward as long as I've got a level to trade against it. And that's all it is. It's half a trading. But option activity is also great, which I put in here. It's great to watch what institutions are doing. I mean, there was no buying going on today. Very little buying going on in single names. What I saw every 30, 40 minutes was just another big block of S&P or Q's puts. So that tells me what institutions are doing. I think that is probably one of the most important things for tape reading, just to see what these institutions are up to. They were doing more stuff like this. They were buying TLT calls today. Now, I don't know, maybe this was a roll. Oh no, this went up. Somebody did this at the end of the day. This one caught my eye. This is a $900,000 trade. March 25 calls. And then maybe somebody took profits on their January calls for 5,700. Option X we're not doing anymore, so you don't have to worry about that. But yeah, I mean, this is what institutions are doing right now. Here's another one, June 132 calls. And I mentioned in the beginning of the webinar, there's been a lot of GLD stuff. So what we want to see, it's going to hit you right in the face. If you're in the room, and you could always ask me, is there any change really in what the institutions are doing? Are they starting to come in and buy single names? I started to see that a little bit last week, and most of it, and going back to what we said last week, I'm sorry I don't have my spreadsheet up with option activity, but I kept saying, and I will give the Nigerians a positive here. They basically said the same thing that I was saying in the room, was that most of the call activity that we saw was very short dated, going 2 weeks out. So what does that tell you? That most of these institutions were playing a short-term bounce in single names. All kinds of it was mainly this week's expiration and next week's expiration, Mainly this week's expiration is what we saw last week in single name call volume. A couple things in February, a couple things in January, but that's not positioning long term. That's playing for playing for a short term bounce. So we got it. So now let's see. So you could basically wipe that slate clean and see what they're going to be up to for the coming months. But there's not a lot. There's not a lot of things to get excited about on the long side with the institutional option activity. And that's my opinion. If you guys see anything different, let me know. But I'm just not, for the most part, and like summary for the day's flows, it's just not there. Gold and TLT are the the things. There's even some IEF today too, which is the 7 to 10 year, which is the other ETF. A little bit, nothing to really for me to think is crazy, but they were in there. January 103s, March 103s, March 103s again. Small. This is small stuff. What else can we talk? And by all means, I'll any charts that you guys want to go over, just to look at some other things, right? I mean, we saw what happened with the yen last night. So, the reason why I'm going over so much of this is just to say, give it some time and patience, and there will be, I think, some better opportunities. That doesn't mean that you have to completely stay out of things. I mean, I think that there's some things that are interesting. I got into what I took a small position. And again, these are not big positions. Again, position size, right? Position size and quantity of positions, which I put in there too. This is not a place to have a lot of positions on. And, these are all things to kind of put in your plan, not while the market is open. Think about how many positions you want to hold, that you want to monitor, whether it be just regular stock positions. And then do not go over that. I mean, is it, normally back a couple of years ago, I would have 15 positions on. Now maybe I just want 3. This one I bought, 50 shares of this thing? That's it. So, I've got a couple stock positions on, but mainly they're all small. This 5 actually acted okay until the end of the day today. But this did not hit my stop. My stop's at 200. So that's fine. Stocks can go down a little bit too. Another one I think is interesting is Dollar Tree. I think some of the names now that the 10-year is going back down, names with high dividends are going to probably be interesting. I can't believe I was looking at AT&T. So Dollar Tree is back above the 200. Again, it's a $90 stock, so you could also couple this, right? You could buy 100 shares, and you could buy maybe a couple calls. This way, you're not overly exposed in the options, so you could kind of mix and match a little bit. Just something a little bit different than just outright calls, because all the option prices are higher than normal, meaning that they're more expensive right now. But it doesn't mean you have to shy away from the option market completely. Just kind of change it up a little bit. AT&T. You would think AT&T would have been down a lot today, but maybe the dividend. I think this is a short candidate. I'm watching this one. So, we don't talk about that a lot. Stocks to short. The only thing that it probably has going for it is the dividend. What is this thing yielding? In an environment now where the yields are going lower and lower. Remember when TLT goes up, bond yields go lower, and there's a ratio that people look at higher dividend names. But I'm telling you, I walked into when I upgraded to my last iPhone, I was in the AT&T store. Horrible. So it's just one store. But I don't know. How does this thing end up positive on the day? What are their biggest businesses is selling iPhones. So it's yielding what, six? Wow, is it really yielding that much? What is LVS? LVS has a big dividend? I didn't know that. But I think that this has got to be a short candidate. Oh, 5%. Wow. I didn't realize that. Um, yeah, keep in mind, Thinkorswim does not have, this is just price. It does not have dividends included. So the chart might look different on. But yeah, if this thing falls at the 50-day moving average, I wanted to short this thing so bad today. Because we did see, going back to option activity, we did see a big put buyer in this about a week ago. I don't think it's going to come up. Yeah, here it was. This was February. Yeah, 12/21. So yeah, this is the order. $900,000 order. And then more. So I'll check the open. Let's see if the open interest is still there. It was 25,000. No problem shorting this company. Uh, let's see. Come on, Bloomberg. So I want to see puts, and I want to see the 25 puts, which would be a new low. 25. So I need to open up this. Yeah, they got 75,000 open interest there. Now, I don't know if I would want to do that option. That's really far out of the money. What, you purchase those for 20 cents? But that's if it goes, I mean, maybe target that VPOC at this point, considering it's moved up to 29 bucks and maybe down to 27. This I would do because it's a under $30 stock. This I would probably go in the money. So I would probably go something like maybe March in the money options, maybe the 32 options, because it'll be more sensitive. So anyway, that's a good candidate. But yeah, go figure, right? One of their big products is that they sell is cell phones, and well, I guess everybody will still have a cell phone. They just won't be upgrading, which they get paid on the service, right? So it's a little bit different. So model. And then lastly, and then I'm happy to go over some more any other technicals, but also keeping a watch list, right, of names that you really like here, and just kind of stalking. What are your favorite names, and just kind of waiting for levels. And I talked about Apple today, right? And I just said, hey, I'm not going to really go after this thing until it hits these VPOCs. So those are the levels for me, 140 and 136, and that's where I would be. That's where I would give that a shot. So just like anything else, right? Any other names? Like Workday is a name that I like to go back to. Maybe if this thing comes back to the rising 50-day moving average, this was a great place to buy. I made some money on that the last time it did this, but you gotta wait. You got, I think anyway, because there's nothing, unless a bar comes tomorrow and takes this candle out, I would wait until this thing checks back to the 50-day. But that would be, so part of it is just waiting for the right opportunities for the swing trades. So keeping monitoring your watch list, adding a few names here and there. All right, guys. So that's kind of the major thing. The major theme strategy is wait for some of these things to improve. And I do. I mean, I think, my view is, which again, I don't like to make the predictions and the price targets, but I think if we end up going a little bit lower, maybe taking out the lows, I mean, I think it'll be a decent opportunity. I don't think that I'm not a doom and gloom. I think if we happen to go another clip lower, I think it'll be a pretty good buying opportunity. But I think there's still a lot of stuff going on in this market besides this, right? That was one of the first bullets that I talked about was fund liquidations. Let some of that continue to, because I think there's going to be more pain for the amount of move that we've had. I think you're going to be hearing more about equity outflows and funds getting blown up here and there. Michael says sometimes it's harder to trade. Sometimes are harder to trade than others. This is one of those times. Be patient. Absolutely. Yeah. I mean, just to remind you, and then we'll call it a night. We are not. We're basically trendless right now, right? We've lost the uptrend. We're kind of in a downtrend. I mean, I don't know. I guess we're in formally in a downtrend. The other thing with shorting that I will mention is, besides something like AT&T, where I think is a good opportunity to short, I think there's plenty of day trading shorting opportunities. Because I do think over time markets go up. So, but I think really if you do have those if you have a couple swing trade positions on, for the most part, you should be trying to protect those positions by putting on puts right now. And something that I have to get a little bit, realize and get a little bit better at too, right? I mean, we all need to get better at some things. Is just realizing, maybe yesterday that it was the time to actually put on a little bit of protection. But if you did that, I think you were also lucky yesterday because who knew that Apple was going to come out? And I did mention, I think I mentioned yesterday in the room, I said, hey, these are some things that you could be doing. You could be selling some out of them. I think I mentioned that yesterday afternoon around 2 or 3 o'clock. I said, hey, there's some things that you could be doing. You could be selling out of the money call spreads in SPY or the Qs, selling some premium here and there, rolling positions. If you don't play smaller amounts, they will whipsaw you on every trade. Yeah, so trading smaller size, absolutely. Mentioned that with a couple trades and the quantity as well. Okay, guys. Any questions? But I think this was good. And I want to make this more of a habit of doing. Maybe in the beginning. This week is all screwed up with the holiday in the middle of it, but giving a little bit more webinars after the close. It's so much easier to go through things after the close. I kind of stopped the midday session because going back to October, I would come on at 11:30 and the market would just start tanking at 11:30. So it was just too difficult to really do. But I think it's important to spend an hour one day of the week at least, after the close, and really kind of, talking about markets, maybe even like a looser format, and just going, through basically just chart studies. So that's kind of what I was thinking. Maybe Monday or Tuesday every week, just talking about the topics, not so much as structured as this was during this webinar, but just basically going over charts. Even if it's like the stock contest charts that we have, and then kind of forming an opinion based on what we're seeing. Okay, cool. Thanks, guys, for joining me. And we'll see what tomorrow brings. We got two events for tomorrow. We got the Fed, sorry, we have the jobs number 8:30, and then I think it's 10:15 Powell speaks. Let's see if this guy changes his tune. If not, if the market rallies in the first hour, I might be, that would be the perfect, probably, well, not a perfect scenario, but it would be a nice scenario, is that if we see short covering into this Powell speech, in the first 45 minutes, and then it would be a place to maybe put on some short plays, because I don't know if this guy's gonna say anything differently. All right, guys, so that's it. Have a great night, everybody. See you tomorrow.